Ever applied for a credit card or loan in Dubai and got rejected even though you earn well? That rejection often comes down to one hidden number, your credit score. It silently decides if you'll drive that new car, buy that apartment, or even get hired for a job. Today, I'll reveal how it works, what kills it, and how to boost it fast. Tip 1. What exactly is a credit score in the UAE? In the UAE, your credit score is a 3-digit number ranging from 300 to 900, issued by the Al Etihad Credit Bureau, or AECB. It's like your financial fingerprint, completely unique to you, reflecting how you handle loans, bills, and credit cards. Every time you borrow, pay, or even apply for something new, the AECB updates that score. Here's how it's interpreted. A score of 750 or higher is considered excellent. It tells banks that you're reliable, financially disciplined, and low risk. That means better offers, lower interest rates, and faster approvals. A score between 650 and 749 is average. You'll still qualify for most products, but with stricter terms. Anything under 550 is a red flag. You'll either get rejected or be forced to accept high interest rates and lower credit limits. What most people don't realize is that your score affects far more than just bank loans. In the UAE, employers in banking, aviation, and even government-linked companies may check your credit history when hiring. If you're managing money responsibly, it shows financial maturity. If not, it could limit your professional opportunities. That's why protecting your score isn't just about money, it's about your future. Tip 2. How is your credit score calculated? The exact formula is complex, but the key factors are clear. Your score is built from 5 main components, and understanding them helps you control it. The first and most important is a payment history, making up 35% of your score. Do you pay your credit cards, loans, and bills on time? Even a single missed Etisalat or DIWA payment can drag your score down by 50 points or more. The AECB records all payment activity, so one mistake can linger for years. Next is credit utilization, which contributes 30%. This measures how much of your credit limit you actually use. For example, if your card limit is 10,000 dirhams and you often spend 9,000 before repaying, banks see that as risky. Keeping your usage under 30% shows self-control and financial balance. The types of credit you hold count for 10%. Having a mix, such as a personal loan, car loan, and credit card, shows you can handle multiple kinds of credit responsibly. Only ever using one type can make your score grow slower. The last 5% comes from new credit applications. Each time you apply for a loan or card, the bank performs what's called a hard inquiry. Too many within a short time suggests you are desperate for money, which lowers your score. Here's something few people know. Missing a 200 dirham mobile bill can hurt your score just as much as missing a car loan installment. So whether it's big or small, never skip payments. Tip 3. Why your credit score matters more than you think. A lot of people in the UAE assume that a good salary guarantees loan approval. It doesn't. Banks care more about your financial behavior than your paycheck. Let's take mortgages as an example. A high credit score could save you hundreds of thousands of dirhams over 20 or 25 years. Lower scores mean higher rates, and that extra 1% or 2% in interest adds up massively. Car loans are another big one. With an excellent score, you might get an interest rate of 3%. With a poor score, you could be charged 7% or even higher. That's the difference between paying 60,000 dirhams and 120,000 dirhams in interest over time. Credit cards are also heavily score-based. Someone with a high score could be offered a 50,000 dirham limit, while someone with an average score might only get 5,000. Your limit determines your financial flexibility, how much you can borrow, and what benefits or rewards you qualify for. And here's a recent trend. Some landlords in Dubai are starting to review tenants' credit reports before leasing premium properties. So your score can influence where you live, what kind of deals you get, and the lifestyle you maintain. Tip 4. The mistakes that destroy credit scores in the UAE. Now let's talk about the habits that silently destroy your credit score. The first is late payments. Missing even one utility or card payment gets reported to AECB and stays on record for years. It doesn't matter if you forgot or were short on cash, the system records it the same way. Next, maxing out your credit cards is another big mistake. Even if you repay the balance each month, using your full limit consistently looks risky. It signals that you rely heavily on credit. Then there's closing old cards. People often think it's smart to reduce unused credit, but it actually shortens your credit history and reduces your available limit. Both factors can drop your score fast. Another major error is applying for too many products at once. Submitting multiple credit card or loan applications in the same month creates several hard inquiries. Banks interpret that as financial instability. Finally, acting as a guarantor for someone else's loan might sound like helping, but if they default, it becomes your problem. You share the same risk and the same credit damage. Tip 5. How to boost your credit score. Fast. Now let's get to the good part. How to actually raise your score. And quickly. Start with the simplest rule. Always pay on time. Set up auto pay for your credit cards, Etisalat, due, and DEWA bills. Even a single delay can undo months of good progress. Second, keep your credit utilization low. If your limit is 20,000 dirhams, try not to exceed 6,000. Here's a smart trick. Request a higher limit from your bank, but maintain the same spending habits. That instantly improves your utilization percentage. Third, don't close old accounts. Keep them active with small transaction, a coffee, a grocery payment, and pay them off in full. The longer your history, the stronger your score. Fourth, space out credit applications. Apply for one product at a time and wait at least 3 months before submitting another request. This prevents unnecessary hard checks. Fifth, check your report regularly. Use the AECB app to download your full report. It costs a small fee, but it's worth it. You'll see what's affecting your score. Maybe an unpaid fine you forgot, or an old account that's still open. If you find errors, you can dispute them directly with the Bureau. Now here's the insider strategy. If your score dropped because of missed payments, start small. Pay off one credit card in full, and keep it at a zero balance for 6 straight months. That single action can cause a noticeable increase in your score, making it easier to qualify for better offers later. Consistency is key. The AECB system values long-term reliability more than short bursts of good behavior. Think of your score like a marathon, not a sprint. Your credit score is your financial passport in the UAE. It determines how easily you can borrow, what interest you'll pay, and sometimes even the home you live in. Now that you know how it works, you can take control and use the system to your advantage. Have you ever checked your AECB score? Drop your range in the comments. 300 to 500, 500 to 700, or above 700. If you found this helpful, hit like, subscribe for more UAE financial tips, and turn on notifications so you don't miss the next video.